The $8 billion customer fund fraud organized by Sam Bankman-Fried. Sam Bankman-Fried is a name that resonates strongly in the world of cryptocurrency and finance. As a visionary entrepreneur and a prominent figure in the digital currency space, he has risen to prominence for his innovative contributions to the industry. Known for co-founding FTX, one of the world's leading cryptocurrency exchanges, Bankman-Fried has navigated the complex and volatile landscape of digital assets. But as we all know, he has also played a pivotal role in executing one of America's biggest financial frauds. In this video, we'll expose the customer fund fraud organized by Sam Bankman-Fried, shedding light on the man behind this story and the significant role he plays in the fall of the biggest cryptocurrency exchange and hedge fund. Hey there, welcome to New Money Luxury, your all-in-one source for all things about athletes, celebrities and royalties, where we talk about their lifestyle, spending habits and luxurious means of living. Sit back, relax, and don't forget to like the video and subscribe to our channel, and so you won't miss any of our uploads. One of the biggest financial frauds in American history. Federal prosecutors from the United States Attorney's Office for the Southern District of New York and the Securities and Exchange Commission allege that Bankman-Fried was the core of one of the biggest financial frauds in American history. One of the most high-profile fraud prosecutions since Enron is illuminated by the claims brought against Bankman-Fried, which were compiled in lightning speed. In November of 2017, Bankman-Fried rented office space in Berkeley, California, and launched his cryptocurrency hedge fund, Alameda Research. Bankman-Fried was the son of two Stanford law professors. He studied at MIT, worked for the elite quantitative trading firm Jane Street Capital, and entered the cryptocurrency market with his MIT classmate, Gary Wang. In essence, Alameda Research operated as an arbitrage firm, buying Bitcoin on one exchange and selling it on another for a profit. Because of the large price discrepancy between South Korea and the rest of the world, Bankman-Fried and Wang made a ton of money on the deal, which became known as the Kimchi Swap. Founded in April 2019 by Bankman-Fried, Wang and UC Berkeley alum Nishad Singh, FTX.com is a global cryptocurrency exchange that prioritizes client satisfaction above all else. It provides cutting-edge trading tools, a flexible interface, and a secure environment. Unbeknownst to all but a small circle of insiders, according to the CFTC, Bankman-Fried used client assets, especially customers' personal Bitcoin deposits, for Alameda's own bets barely 1 month after starting FTX.com. Exposing the fraud. Bankman-Fried stepped aside from his leadership role at Alameda Research in October 2021 in what CFTC regulators allege was a planned move to promote a false impression of separation between FTX and the hedge fund. However, authorities assert that he maintained control nonetheless. Alameda's unlimited credit line at FTX was reportedly depleted after being ordered to use more client assets by Bankman-Fried. In order to make these massive withdrawals, Alameda was able to rely on its unreported ordinary course access to FTX credit and customer cash, as stated in the CFTC petition. Alameda owed almost $8 billion to FTX's oblivious customers by the middle of 2022. Bankman-Fried claimed in front of the House that FTX had top-notch risk management and compliance procedures, yet the company's own bankruptcy filings show that it kept very few records. The first domino finally came down on November 2nd. CoinDesk, a trade publication for the cryptocurrency industry, made Alameda's asset information, which were valued at $14.6 billion. More than $7 billion of these holdings were FTT tokens or coins backed by Bankman-Fried's fund, such as Solana or Serum. Even more than that, $2 billion was stashed away in equity investments. Alameda Research's previously undisclosed inner workings were exposed as a modern-day Potemkin village. As a result, FTX investors started selling their FTT tokens and pulling their money out, which might be disastrous for Bankman-Fried. There were still billions in outstanding collateralized loans for Alameda to pay back, but a significant drop in the value of their FTT collateral would trigger additional margin calls from lenders. Alameda allegedly could not meet its summer loan obligations without resorting to client finances. Alameda and FTX were experiencing a liquidity shortage as money was leaving the market and the price of FTT was falling. Bankman-Fried reiterated his earlier claims that FTX was well funded and that customers' funds were secure in a now deleted tweet. On November 6, 4 days after the CoinDesk report, the fissure opened up into a chasm due to the action of Changpeng CZ Zhao, a former investor turned opponent. In 2019, Binance, which Zhao started in 2017, funded a Series A round of FTX. By July 2021, it had withdrawn from the investment, coinciding with FTX's $1 billion funding round led by firms including Sequoia Capital and Thoma Bravo. According to Zhao, FTX paid BUSD, BNB, and FTT to acquire Binance. Binance's stablecoin, BUSD, is backed by the dollar and issued by the exchange itself. BNB is an exchange-traded token, similar to FTX's FTT, created by Binance and used to pay processing and trading fees on the trading platform. With a single tweet, Zhao slammed the door shut, announcing that recent revelations that have come to light, we've decided to liquidate any remaining FTT on our books. Executives at FTX hurried to limit the impact. After Zhao's initial offer to buy out Binance's remaining FTT position, Ellison countered by offering to buy it for $22 per token to rapidly free up capital for FTT buybacks, as stated in the CFTC petition. Bankman-Fried privately instructed Alameda traders to sell Alameda's equities and positions. Bankman-Fried was prepared to risk everything in an attempt to keep Ellison's public approval rating at $22. Traders in Alameda were able to prevent a drop in the price of FTT by almost $22 over the course of 2 days. Bankman-Fried made it appear to the outside world that everything was well. His post from November 7, claiming that his assets were secure, has subsequently been deleted. According to Bankman-Fried, FTX does not invest customer assets and all redemptions will be honored. While Bankman-Fried was tweeting promises, executives were, according to investigators, growing increasingly anxious at the rising shortage. Bankman-Fried and other executives instead admitted amongst themselves that FTX customer funds were irrevocably lost because Alameda had appropriated them. This revelation directly contradicted everything publicly stated by Bankman-Fried up until the day of his arrest, 1 month later. The deficit increased from $1 billion on October 24 to $8 billion by November 8. Bankman-Fried had been trying to secure a bailout from private investors. On that day, FTX put a hold on all withdrawals for all customers. FTT's price plunged by nearly 75%. There was a decentralized technological bank run on Bankman-Fried. Finally, he turned to Zhao, who stated that he had signed a non-binding letter of intent to acquire FTX.com after all other options had been exhausted. However, on November 9, Binance announced it will not complete the acquisition because of reports of mishandled customer funds and federal inquiries. Bankman-Fried resigned as CEO of FTX and related companies 2 days later. Sullivan and Cromwell, FTX's longtime legal counsel, asked John J. Ray, who had previously overseen Enron through its bankruptcy, to replace Bankman-Fried. On November 11th, FTX submitted its bankruptcy papers. A month later, Bahamian law enforcement officials arrested Bankman-Fried on fraud, conspiracy, and money laundering allegations, and he is currently being held for extradition to the United States. Bankman-Fried, an adherent to the ideology of effective altruism, seemed to be compelled by an obsession with trying to put a monetary value on the impacts that he had made in the world. He created a spreadsheet to quantify Alameda's global impact. Due to Bankman-Fried's alleged wrongdoing, billions of dollars in customer funds are potentially at risk of being reclaimed from venture funds, political war chests, and charitable coffers. Almost 10 years ago, Bankman-Fried questioned rhetorically on his own blog, just how much impact can a dollar have? while waxing poetic about effective altruism. Well, if you want a one-sentence answer, here it is. 1/2000th of a life, he replied. According to the CFTC, more than $8 billion in client funds have vanished. It's likely that some clients have lost everything they had saved for retirement, college for their children, or a down payment on a house. According to Bankman-Fried, his alleged wrongdoings cost 4 million lives. Overall, exercising caution when it comes to cryptocurrency frauds is not just a best practice, it's a fundamental necessity in the world of digital assets. The cryptocurrency market, while filled with opportunities for financial growth, is also rife with scams and fraudulent schemes. Remember that the cryptocurrency market is relatively young, and regulations may vary by region. Due to this, it's a prime target for fraudsters. While there are legitimate and exciting opportunities in the world of cryptocurrencies, it's essential to approach the market with caution, skepticism, and a commitment to safeguarding your investments. Don't forget to like, subscribe, and hit the notification bell to stay up to date with our latest content, and be sure to comment on other celebrities, athletes, and royalties you would like us to profile in future episodes. We look forward to seeing you in the next one. Thanks for watching.